Welcome to Stoxies. Markets are falling, and along with them, many strong companies are dropping too. Right now, fear is everywhere. War, rising costs, uncertainty about the future. And when people are afraid, they sell, often without really thinking about which businesses are actually strong. And that's exactly where opportunities begin to appear. Because in every downturn, it's not just weak companies that fall. Strong businesses with solid foundations also get pulled down by the overall market sentiment. And historically, when a crisis comes to an end, these are the companies that tend to come back even stronger. In today's video, we're going to look at two such cases. Companies that have been under pressure, but have real reasons to make a strong comeback when things start to stabilize. Right now, markets are declining, and uncertainty has increased. Fears about the economy, rising prices, and geopolitical tensions have made many investors more cautious. And when this kind of environment takes over, we tend to see widespread selling. But the key point is this. In times like these, it's not only weak companies that fall. Strong businesses often get pulled down as well, simply because of fear. And that's exactly where real opportunities begin to emerge. One of the companies that stands out in this environment is Micron technology. It operates in a sector that sits behind almost every modern technology: data storage. In simple terms, it produces components that are essential for data centers and artificial intelligence applications, a space that continues to grow. And yet, as you can see, the stock has declined significantly in recent months. That doesn't necessarily mean the company is in trouble. This industry is cyclical. When there are concerns about the economy, investors tend to pull back and prices fall. But when demand returns, these companies often react strongly to the upside. And this is where things get interesting. If the growth in artificial intelligence continues and demand for data rises again, a company like this could see a strong recovery, especially since it's starting from lower levels. Of course, there is also risk. If the economy slows down further, demand could weaken even more, and the pressure on the stock may continue. But it's exactly in conditions like these that the biggest opportunities are often created. Over the past 3 months, the stock moved roughly from around $220 up to as high as $450, representing a gain of over 90% at its peak. This shows how strongly it can move when market sentiment is positive. However, the picture has changed over the past month. The stock reached highs around $460 to $470 in mid-March, but then pulled back to the $380 to $420 range. That's a decline of roughly 10% to 15% in just a few weeks. In simple terms, over the last 3 months, we saw a very strong upward trend, but in the past month, a sharp correction. And that's exactly what makes this stock so interesting right now. Strong momentum before, fear taking over now. The second company worth looking at is Meta. It operates in the social media space and has billions of users around the world, giving it massive scale and influence. Its revenue comes primarily from advertising. During times of crisis, businesses tend to cut their advertising budgets, which puts temporary pressure on both revenue and the stock. But when the economy starts to recover, advertising spending usually returns quickly, and with it, the company's momentum. At the same time, Meta has taken important steps to become more efficient, reducing costs, and investing in new technologies that strengthen its revenue streams. This means that once conditions stabilize, the company could be in a strong position for a solid recovery. Of course, there is also risk. If the crisis lasts longer, advertising revenue may remain under pressure. However, historically, companies with this kind of scale and strength are often among the first to benefit when the economy begins to recover. If we look at the stock's performance over the recent period, we can understand why it has attracted so much attention. Over the past 3 months, the stock moved from around $720 at the beginning of the year down to roughly $620 to $650 by March. That represents a total decline of about 10 to 15%. However, the pressure has become more intense more recently. In the past month, the stock traded around $640 to $660 and then dropped to the $600 to $620 range, marking a decline of approximately 3 to 8% within just a few weeks. On some days, the moves were even sharper, with daily losses reaching around 7 to 8%, driven by negative news and increased market uncertainty. In simple terms, over the last 3 months, we've seen a clear downward trend, and in the past month, that pressure has intensified even further. And that's exactly what makes the stock interesting right now. Not because it's going up, but because it's been pushed down in a fear-driven environment. So why exactly do these two companies stand out? Both have declined recently, but not because their businesses or long-term prospects have deteriorated. Instead, market fear and uncertainty have pushed them down more than they likely deserve. Micron, operating in the technology and data infrastructure space, is part of a sector with strong demand and long-term growth potential, but it's currently starting from lower levels. Meta, with billions of users worldwide and a dominant position in digital advertising, has the ability to recover quickly once the economy stabilizes, as advertising demand is usually among the first to return. In simple terms, one offers strong upside potential due to its relatively low valuation, while the other provides scale, stability, and growth. Together, they show how real opportunities can emerge even during times of crisis. This doesn't mean these stocks will go up tomorrow, but historically, when a crisis comes to an end, companies with strong fundamentals and real momentum are often the first to lead the recovery. These two cases show how patience and strategy can turn market fear into opportunity. If you'd like to see more analyses like this, make sure to subscribe to the channel and leave a comment. And let us know, which of the two do you think will make the biggest comeback?